Hey guys, what's up? This is Andrew for TRENDLINES.com, and I'm here to make a big update on AMC. A lot of things are happening this week. Again, we are in the third wave, so let's see what the charts are telling us. Let's get into it. So 4 hours time frame. In my last video, I was actually telling you guys that we were starting this third wave of the third wave that is very impulsive, that we see the volumes kicking in. We see the volumes very good, very well on the daily time frame here. So let's see exactly the number of shares. It's interesting to see exactly the number of shares that were traded, and I'm going to explain very soon how I use this information. Yes, around 200 million shares. So it's like, half of the share float roughly. So it's really a lot. And I wanted to show you something. So if you go on Yahoo Finance, you check the news. So here is AMC's CEO, Adam Aaron. So basically he's thanking, the apes for the support they're giving to his firm. Right now they're actually calling him Silverback, so he's like the chief of like the group of gorillas, this is what is a Silverback. And what is very interesting in this article is actually that it's here, guys. 3 million investor apes strong. On the company's earnings call, Aaron revealed AMC had more than 3 million individual shareholders who owned more than 80% of its 450 million shares as of March 11. So this is a very big news. I was actually looking for this information. You can check who is owning the share, but you're mostly going to find some institutional clients, some hedge funds, Citadel, companies like this, but you don't know who is the end investor. And it's actually information that is supposed to be public, but it's not easy to know what is true or not. When the CEO is telling that 80% of its shares are actually owned by individual investors, this is to me very good news. It means that, only 20% is left for, other investors that don't invest the same way, I would say. So this is very positive. And here you can see that around 150 to 100 million shares are trading every day. So we know that apes are buying. Now let's see what technicals are actually giving us here. The first thing, in my last video, I was telling you guys, I think I did my last video around like here. Maybe here, yeah, I did it here around 12. So I was telling you that right now we are very bullish because we are in this third wave. So when I said third wave, I'm talking of a larger degree wave counting. So I'm talking about this one, the blue one, that to me is going to 25. And inside this third wave, we've completed the one. We had the second wave that was a bit tricky. And now we are in the third wave of the third wave that itself going to contain 5 waves. And in this 5 waves development, we only finished the third wave. So what I'm saying here is that we're probably going to have a bit of a correction until the 20th of May maximum. It can go right away. I'm just giving you here kind of, bearish scenario, which is not bearish at all, but this consolidation might last a bit longer. That's what I'm saying. We actually arrived here to the 15th level. So I told you guys that this level would be a very important level, that we need to take it back, that probably we're going to take it back in the third wave, then correct, and then reach another major level. So I'm going to show you how I found this one. So my scenario is that we correct on the 20th of May. So it has not changed actually. This is the same thing I had when I did my last update on AMC. And that then we're going to go to the 18 area. Why 18, you might ask? And it's just basic fib extensions application. So you measure the first wave that is here and you apply it to the bottom of the second wave. And usually the third compared to the first has a 1-to-1 relation or a 1 to 1.618 relation in terms of ratio. So here, my scenario, we know when I combine this information with my ELLIOTT wave counting, it would actually give me a 18 target for the highest level of this third of the third. Then we'll probably correct to 15 and reach the 1.618, which is no surprise here. Again, guys, technical analysis usually comes back to the same levels. Even if we use different methods, here it's also the highest level we had at the first wave. So this is the target for the 5th of my third. So I'm going to get rid of it. It's just to show you guys how I found those levels. I don't put them here randomly. I put them here for a reason. So I expect we reach 18 around the 26th of May, then correct, then go to 25. Now, let me tell you why I need to go there so quickly. It's very important we actually go there quickly. And let me show you why, guys. There is something I told you about many times during all this correction here. I was telling you that I was seeing a bullish divergence, all right? So the bullish divergence I was seeing is that, I think it was in the 4 time frame. Let me show you this again. And this helped me to actually, to build my bullish view here and to remain bullish despite this complex correction. 1 second. So it's here, guys, right? From here to here, the price action is making higher lows, and the MACD during the same time is actually going lower. So we were having this bullish hidden divergence. All right. You remember, guys, for those who have watched my previous video 1 month ago, I was telling you about that. I told you that market is making higher lows, which is bullish, despite the momentum indicator that I use here, the MACD, that is making lower lows. So this is what we call a bullish hidden divergence. And this helped us to be bullish and to actually find the right answer here on this chart, thanks to this bullish hidden divergence. Now, guys, why do I need the price action to go there so quickly? Because look what we are having here. We are having market making higher highs soon. All right. For now, we are still at this level. True. We are consolidating here. And once again, guys, this is totally normal. We're going to have some, 1, 2, 3, maybe even 5 days of consolidation, but we cannot have too many of those. We need to go there quickly, because the quicker we go, the higher the MACD is going to be. And right now, guys, if I assume we're making a higher high here, which is my scenario, I need the MACD to go higher than the level I had here. Otherwise, I'm going to have here a bearish divergence. So it would be this one. So market making higher highs, and it would be the bearish regular divergence. Market making higher highs with the MACD making lower highs. All right. So we don't want to see this. And for this not to happen, we need the price action to go there quickly with a lot of strength, with a strong momentum. So it's exactly what we're having right now. We just need to keep seeing those strong moves up. If we arrive here without enough strength, we're gonna probably get rejected and we won't do this fifth wave. So we need to arrive here strongly, and I think we would. This is why I put this very bullish scenario here. So I expect AMC, just to, have an idea of what I'm saying. It's not that much. It's like 30%, in a matter of 1 week. So we need this to happen, and we need this MACD to go much higher here for the bullish case to remain intact. One more thing quickly. So what do we have in terms of volume first? So as I said, the weekly volume, 180 million shares, guys. It's a lot. In terms of short interest, the 30th of April data has arrived. 88 million shares, so roughly the same as on the 15th of April. The synthetic short, when I compute all the option market synthetic exposure, I have 6% of the total share float that is short in this market, $300 million of exposure. And when I check my indicator, which is, I check the 40 strike volatility, and I can find for June and September, they are at 273%, guys, which is amazingly high, and 176%. To compare, it was only 150% 2 weeks ago for the September maturity. So this is going higher. This means that option traders need protection for this 40 strikes. This is making the price action looking very bullish, and this could create a gamma squeeze once again. If we go, for example, to 30, the synthetic short exposure goes to 16%, and you can see that it's coming mostly for the 40 strike call. So this is very bullish as well. And for now, we are at 12. So let me go back here. All right. And we are having here the synthetic short that I add to the short interest. So we're having 27% of total short interest. Of course, here I'm not taking into account the naked shorts because I don't know about that. But I compare this data to this data, and I can see that we have more short interest that we used to in January. So this is looking good to me. This data just confirms my bullish case. So guys, that's it for me. I hope you enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I see you guys.